Hello traders, today is the 12th of September 2010 and happy weekend to you all. This video is about the fourth Elliott waves. Okay, right here we have the first Elliott wave from these levels here all the way down here. That's the first wave. The second wave up to this level here, and the third wave, which is the longest wave, all the way from that point up to this level here. That's the end of the third wave, the longest wave. And the TSTW2430 system will catch on a daily chart, okay, on the weekly chart, the third Elliott wave consistently. And this price, you will catch it on the daily chart, on the weekly chart consistently. That's a triple, what we call the triple red signal in the downtrend, that will give you the key to enter the third wave on the daily chart, on the weekly chart, on the 4-hour chart, on the hourly chart. Right here, after the third wave, we have the fourth wave here. From here to this level here, that's the fourth wave. And then this supposed to be the fifth wave starting from here, fail to break this support level here, because the fifth wave should break this support level here of this third wave here, should break the support level here in order to display a lower low, because we are in a downtrend. We must have a lower highs and lower lows. And right here, we are expecting the fifth wave to give us a lower low, but it failed to do that because these people doing all this activity in the fourth wave here, these are late comers. The big party of the bear had finished in the third wave. The professionals are participating in the third wave. So if you want to follow the smart money, if you want to follow the hedge fund managers, if you want to walk in the footstep of the fat wallet traders, the market movers, the specialists, you must focus on the third wave. One big trade will pay for all your losses for you, and you will go on nice holiday saying ha 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 to the bank. Okay, so pay attention to the third wave. That's why it is so important to every trader to learn to master the Elliott wave. If you want to survive, if you want to remain this market, slowly but surely, give yourself a time to learn this powerful tool, the Elliott wave theory. I cannot overstate that. In our website, the www.24elliottwaves.com, you have everything there to help you master this simple tool. We have simplified and oversimplified this theory for anybody to learn and to master it, in order to give you also the same edge of the professional traders. So right here we have the fourth wave. The fourth wave is supposed to be all the way here, and then the fifth wave should break this support level here, fail to break this support level here. So we start again. When a wave has failed, we count it again, because the fifth wave is supposed to be the fifth wave starting from here all the way here has failed to break this support level here. We have to recount that fifth wave. Okay, so we count it from this level here, and finally he break it. Look how he break it. He break it with what we call the exhaustion gap right here. You see, because the professional knew exactly what was going on. They knew on their map, so to speak, that this is the fourth wave. Okay, right here, because they are the one coming out of their position. You see, all this time they were busy selling from this level here, where my favorite powerful tool, the TSTW24 trading system, give a triple red signal to give you the key to enter, like the professional trader, all the way. The price was gushing down all the way here. They know exactly what is going on. The hedge fund knew, the smart money knew, the fund managers knew that this is it, the end of the Elliott wave, which was very long. This is the longest one. They came out, that's why I create this. So when you are trading the fourth wave in the downtrend, it's a rally, a counter trend in a rally. You do not swing trade in the fourth wave. Very important. Repeat, do not swing trade in the fourth wave. The best place to swing trade, to have a smooth swing trading, is in the third wave. If you are swing trading, the experienced swing traders will tell you exactly what I'm telling you. If they did not tell you, it's because they don't want you to know. The third wave, that's where the swing traders are busy creaming the market consistently. That's the best place to cream the market. Now the fourth wave, the professionals are coming out. So the latecomers are leaking their plates, okay? They come out, boom, 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 boom. Now the fifth wave has started here. They start selling. Some people think that they are some crazy, I like to put it that way because myself, I was a crazy trader before. Anytime I see double bottom, I start jumping on it and start buying. But this double bottom is in a downtrend, for God's sake. You don't use double bottom in the downtrend. You use double bottom in the uptrend. The only time you use the double bottom in the downtrend is when the trend is about to end. So if you know about the Elliott wave, you will know clearly that this is the fourth wave. So you know that the trend is not ended yet. So you will be very careful if you see this activity going on here when people are buying up. And exactly right there, the professional punish them by using another Fibonacci tool. They will draw it here. Probably this is another 66% Fibonacci retracement here, and they sold it down. Look at this, very careful. Pay attention to the fourth wave. This is the psychology of the fourth wave. The fourth wave is not the best place to swing trade, but it's the best place to day trade. Okay, the day trade is very smooth in the fourth wave because all you are doing is a consolidation period using your oscillator, your RSI indicator to cream the market there, looking for, because you want a rally in the fourth wave in the downtrend, okay? So you are creaming only the signal to buy in the fourth wave, okay? And right here, as soon as this low here, if you pay attention here, the low here that was created at the junction of the third wave and the fourth wave right here was taken out. Look what's happened. The price gap down. I'll show you clearly here. The price gap down. This candle here and this candle here. This is a daily chart of the euro Canadian dollar currency pair. The price gap down here because the professional knew that these people here were doing something they're not supposed to do. They shouldn't buy here because they think that the trend has ended. This is the double bottom. It was not. On the clock of the professional traders, they were still expecting the fifth wave, and right there they punish those buyers here if they do not take their profit quickly. If they are expecting some miracle, they shouldn't, because they should take their profit, close their position and go away, and they sold them down and gap down. Exhaustion gap. If you heard about exhaustion gap, the exhaustion gap usually happen in the fifth wave, okay? So it pushes down big time. Right here, the fifth wave has ended. What we want to talk about here about the fourth wave is about the psychology of the market during that time. The professionals are closing their position that they have taken in the third wave. In this case, it was a downtrend, so the price rally, which is a counter trend, you will be busy day trading during that time, scalping, taking your profit fast, right, observing carefully what's happened. And right here, you will draw on the fourth wave. You know that this low, to have the fifth wave completed, this low here where my cursor is must be taken out. And when you see it happening here, you draw your horizontal line and you are waiting that day trading, expecting the action to happen. And you will see after these days here, you can swing trade down from this low level here when it's taken out, and you see what's happened. It just gap down because the professional placed their sell order below this junction here, okay, and the price just gap down big time all the way here, creating the last Elliott wave, the fifth wave, all the way from here down here. Like I said to you before, when a wave has failed, you must count it again. This is the fourth wave here. The fifth wave that's supposed to be, repeat, supposed to be fifth wave that has started here has failed to take this low here because they find some buyers here that were pushing the price in the other direction. The professional knew that the fifth wave is not completed here. The Elliott wave cycle is not completed here. They sold it down and they placed this the sell order below the low of this level here, knew that this low must be taken out. I repeat, in order to sell like professional traders, you must also take into consideration the fundamental and the market sentiment. I believe at that period, Euro Canadian dollar, people, the professional knew that the fundamental can never ever back this currency pair, and they knew that they must by all means have their fifth wave. So they just placed their orders here. As you can see, the exhaustion gap was here, and that was the end of it. If I show you the end of the party clearly here, we just have a big double bottom pattern here to tell us that it's all over. This is it. Yeah, so this is how you use the Elliott wave like professional. Till next time, enjoy yourself and be very happy.